Are you a stock investor looking to make it big in the stock market? Did you know there are 6 dirty secrets that traders refuse to talk about? These secrets could make or break your future in the game. Over $100 trillion are traded globally each year, and not all of it is done ethically. So buckle up and let's get started exposing the 6 dirty secrets that most traders don't want you to know, including number 6, which is the biggest and most common of them all. Dirty secret number 1, insider trading. Imagine a world where secrets are the currency of the elite, a world where the mere whisper of privileged information can turn the ordinary person into the king or queen of Wall Street. This is the world of insider trading, where those who possess information hold the power to make or break the fortunes of others. Picture this. A high-level executive, let's call her Emily, sits in a corner office overlooking the bustling streets of New York City. She's just received an email from a colleague. She checks her phone, and there are details of confidential information that are going to send shockwaves through the markets about a potential merger. Emily's heart races as she realizes the opportunity and immense power she now holds in her hand. She could keep that information and make a killing when the market opens, or she could share it with friends and colleagues, creating a network of power who profit from the insider information. The temptation at this point is just too much to bear. But insider trading isn't just a game of chance or a way to get rich. It's illegal, it's a dangerous activity, and many traders get caught up in it, resulting in hefty fines, ruined reputations, and even jail time. Those who engage in insider trading may consider themselves above the law, but eventually their luck runs out and the practice catches up with them. Dirty secret number 2, market manipulation. Maybe you've watched a movie where the bad guy manipulates the stock market for their own personal gain. It might seem like something out of the Hollywood script, but the truth is that market manipulation is a very real and very dangerous practice that can have devastating consequences. Let's say a billionaire named Jack owns a large stake in a company that's been struggling in the stock market. Jack's plan? To manipulate the market to his advantage. He starts spreading false rumors about competition, causing a panic among investors and driving the competitor's stock price down. At the same time, he starts buying up shares of his own struggling company, knowing the price will eventually go back up once the rumors subside. And as the stock price rises, billionaire Jack sells off his shares for a huge profit, leaving other investors in the dust. Market manipulation isn't just unethical, it's also illegal. And governments around the world have strict laws against market manipulation, and those who engage in it can find themselves facing hefty fines or even jail time. Something you definitely want to stay away from. Dirty secret number 3, high frequency trading. So why did the high frequency trader refuse to take a vacation? Well, the answer, of course, they didn't want to miss a microsecond of trading. Boom, boom. Speed is the name of the game, and the fastest computer, the fastest algorithm wins. This is the world of high frequency trading. It is a lightning fast game of buying and selling, and definitely not for the faint of heart. Here's how it works. High frequency traders use algorithms that lightning fast computers to buy and sell shares of stock at lightning fast speeds. They can make thousands of trades in a single second and take advantage of the tiniest of fluctuations in the overall market. It's like a game of hot potato, but with millions of dollars at stake. The goal is to buy low and sell high, but you have to do it faster than everybody else. It's a cutthroat world where a millisecond can make or break your bottom line. And it's super controversial, with some people arguing it gives an unfair advantage to those with the fastest computers. But hate it or love it, high frequency trading has been around for a while and it's here to stay. Dirty secret number 4, stop loss hunting. Imagine you're a small time trader. You're eagerly watching the market, trying to make a profit. You place a stop loss order, a safety net that's great to have, but isn't likely to be activated. But then out of nowhere, the market plunges. Your stop loss order is triggered and you lose a good chunk of change that you were not expecting because the market seemed to be moving higher. Welcome to the world of stop loss hunting, a ruthless practice by Wall Street traders to manipulate markets and take advantage of everyday investors. Traders on Wall Street use their immense resources and advanced technology to trigger stop loss orders en masse. They know that when these orders are triggered, they can cause a sudden drop in the market, allowing them to buy up shares at a steep discount and then sell them later for huge profits. And this practice is not victimless. Everyday traders like you and me who use stop loss orders to protect themselves become the victims and often suffer the most. They lose money when their orders are triggered and they have no idea why it happened or why it happened so quickly. It's a cruel game of cat and mouse where the little guy is always at a disadvantage. Dirty secret number 5, front running. Picture this. You're running a marathon, and just as you're about to reach the finish line, someone gets out of the crowd, jumps onto the track, sprints ahead, and wins the race. That's what it feels like to be the victim of front running in the stock market. Big time traders, often hedge funds and investment banks, use their insider knowledge and advanced technology to jump in front of smaller investors when they know a big trade is about to happen. They buy or sell shares before a smaller investor can, knowing that a large order from a client is about to move the market substantially in their favor. Then they turn around and sell the shares at a higher price, making a profit and leaving the smaller investor wondering what the heck just happened. Everyday investors don't have the resources to compete with the Wall Street elites who use their insider knowledge and advanced tech to manipulate the market for profit. Dirty secret number 6, pump and dump. This one happens all the time. It's the dirty secret you see playing out in movies like The Wolf of Wall Street. A pump and dump scheme is a financial roller coaster ride, one that you definitely do not want to get on. Here's how it works. First, a group of shady traders or even an individual buy up a large amount of shares in a low value company that has little to no real or potential value. This is the pump phase of the scheme. Next, they use various tactics, including misleading information, to hype up the company and create a buzz in the market. They may use social media, they may use emails, they may even do cold calling to try to lure unsuspecting investors into buying the stock. And as more investors do buy the stock, the price begins to ride, creating a sense of fear of missing out, or FOMO, among other investors. This drives the price up even further, and our shady traders or that individual continue to pump the stock, creating this artificial bubble. Finally, when the price has reached its peak, those shady traders sell off their shares en masse, making a huge profit. This is the dump phase of the scheme, and when those original traders have made their profits, the value of the stock crashes. This leaves those who bought in at inflated prices with worthless shares, and their money goes to zero. These investors end up losing their hard-earned money as the scheme ultimately collapses. The best way to not get caught up in these sketchy trading practices: invest in yourself, create a repeatable system for your investing, and focus on the long term. If you focus on getting rich for sure over a number of years instead of getting rich quickly, you will remove a lot of risk and operate with a clear understanding of the rules of the market. And the easiest way to invest in the stock market, even as a total beginner, is to do this.